Welcome everyone to the Financial Services HR and Compliance Network webinar this morning. I'm Zoe Avenel, I chair the network, and I'm also head of marketing and events at our co-sponsor, Veran Performance. I hope you're all keeping well and sheltered in the sunshine the last few days, and I hope you're all really looking forward to this morning's sessions. We've got a brilliant lineup, which we'll dive into very shortly. I'm delighted to see so many familiar names in the attendees list, and also so happy to welcome some first timers who have come through various channels, mainly our new LinkedIn page, as well as our new legal sponsor, Osborne Clarke, who have been promoting the event, and our long-standing sponsors, Veran Performance. And so welcome everyone this morning. For those who are joining us for the first time, and to jog the memories of our seasoned members, each time we meet with the network, either in person or on these live webinars, which we've been doing for the last year, we have three key objectives just to keep in mind as you listen to the webinar this morning. So the first is to understand the impact that new and changing legislation has on financial services businesses. So hence the regulatory update at the beginning of the session. Then the second one is to provide a space for industry peers to collaborate and share best practice under Chatham House rules. Now, obviously that's difficult on webinars. However, if you do join our LinkedIn group, which I'll post in the chat shortly, you'll be able to connect with other members and attendees and industry peers from today. And finally, most importantly, it's to promote a consistent approach to regulatory challenges across the financial services industry as a whole. So the group's been running for about, 5 years now. We are a not-for-profit organisation and we host free breakfast seminars throughout the year, although, as I say, these are currently taking place online. We have around 4,000 HR and compliance members across all levels. And they represent about 1,200 regulatory businesses across the country. So if you have any questions about the network and what we're up to and what's coming up in the future, please contact me after the webinar. So moving on to the agenda, I will shortly be handing over to James Turner, the Associate Director in the Financial Institutions Group at Osborne Clarke. James will be sharing the latest financial regulations, including the FCA's proposal of a new consumer duty, which has all sorts of SMCR and governance implications. Olivia Sinfield, who was just made partner at Osborne Clarke, congratulations, Olivia. And Priyanka Patel, a seriously experienced senior associate who works within the employment team at Osborne Clarke. They will be setting the scene of the reality of hybrid working and sharing general practical issues, as well as those challenges specifically related to the financial services industry. Olivia will then be chairing our panel session, firing questions over to our brilliant panelists this morning, Lucy Bond, who is the Deputy Chief of Staff with Man Group. Man Group are an investment manager with about 1,500 employees. I think that's correct. Matt Phelan, the founder of the Happiness Index, who are the providers of employee engagement surveys and solutions to create a happier workplace. And Tom Holmes, the director at Veran Performance, who are a leading HR and finance transformation consultancy. And Tom is also a podcaster who has been interviewing HR and business leaders on the road to recovery post the pandemic. So the panelists have been really carefully considered in order to bring you the best valuable insights and discussion around the topic of hybrid working, and really bringing to life those challenges that different hybrid working models can pose on our businesses. So that's enough from me, and I'm going to hand over to James Turner for the regulatory update. Thanks, James.
Thanks very much, Zoe, and thanks for having me. I should probably start with a little bit of a confession, bearing in mind it's a hybrid working session that I'm actually at my desk in the office, but we'll come to that later. When I was asked to speak at this, one of the instructions I was given was to make sure it was suitably digestible. So we've got a little 3-course meal for you on a FinReg update. We're going to start with a little appetizer, the Amigo Loans scheme of arrangement. quite a hearty, almost spicy main course on the FCA's proposal for the consumer duty, which hopefully will be a pretty significant interest to this audience. And then because it's a sunny day, we're entitled to an ice cream, and so we'll look at the Bank of England's proposals on new forms of digital currency to wrap up. Many of you have probably been following the coverage of the Amigo loans, guarantor loan business, significant backlog of complaints and needs for consumer redress, and their proposals as to how to deal with this. Cutting a long story short, if Amigo loans paid out all the potential liabilities it had to its past and present customers, there just isn't enough money in the bank to do that. So Amigo loans have been looking at how to deal with that, and there's an increasing trend towards using schemes of arrangement, which is essentially a court-sanctioned vote of creditors, customers with claims being a class of creditors, to essentially get them to consent to receiving a smaller payout. The FCA is undoubtedly concerned about the use of an insolvency tool which was certainly never intended to be used in this way against customers from an FCA perspective. And the FCA actually objected to the Amigo loans proposed scheme on the basis that there were other schemes available or other solutions available that would see customers receive more money. And in the end, somewhat to my surprise, I'll be honest with you, the court agreed and has rejected the scheme. And I think there's each of these situations will be very different, so that it's not immediately obvious what general principles can be drawn from that. Although I think what is important is that the court rejected the scheme even though 97% of the people who voted in favour. But the point the court would make is, yeah, but only 8.7% of the people entitled to vote actually voted. So I think the point to take away from that essentially is the FCA is very concerned about the use of schemes of arrangement to avoid paying full redress. And I think if they can see a more generous solution, they are likely to object. So moving on to the consumer duty, where I want to spend several minutes looking at this. It's if you've not read the consultation paper that was published a few weeks ago, certainly for compliance colleagues, I strongly recommend it because there's a wealth of interesting stuff in there, and it may keep you awake at night if you read it in one go. And even I think for HR colleagues, the summary on the FCA's website I think gives quite an insight into what the FCA is seeking to achieve. This is not, as it's been referred to by a few people, just a rebranding of TCF. The FCA are completely explicit. They want the consumer duty to be a change in firms' behaviour with a change in outcomes for customers, better outcomes for customers. So if we just unpack that a little bit more, we'll talk about scope, structure, the slightly scary consequences, and because I'm a fan of alliteration, I've crowbarred in the next steps as well. Scope is wider than you might realise. It is not just true consumers as in you and me. It applies to so-called retail clients, and slightly counterintuitively, retail clients will include small and medium-sized businesses in lots of contexts. So if you don't deal with true consumers, but you are dealing with particularly small businesses, you may still be caught. Similarly, and I think this is going to give rise to a lot of complexity, it applies to regulated firms even if they don't have direct contracts with the end user. So an example of that would be manufacturers of pension products that are then sold and administered by other people. Similarly, I actually spend most of my day job as a payments lawyer. Lots of regulated payment providers are actually effectively infrastructure providers to other brands. They're all caught. I have got so many questions about how that's meant to work in practice that we certainly don't have time to go through them now. The paper says it will depend on the amount of influence the firm has over the end outcome, which actually doesn't answer the question, just raises about 15 more questions about how that's going to and how that's going to be implemented in practice. So that's scope. In terms of structure, there's actually quite a long way to go, because what we've got is a multi-layered approach that the FCA are seeking to build. At the top, there is a new consumer principle that will be added to the principles where, for example, we've currently got TCF. And they are consulting on two possible options. And this, I think, is sort of roadblock one in terms of the difference between these. The two options they're consulting on, one of them says you must act to deliver good outcomes for retail clients. Okay, that sounds all right. I've got some questions about what good outcomes mean and act. But the alternative, which I am worried about, is, particularly given that the FCA seems to think this is just different words but means exactly the same thing, is firms must act in the best interests of retail clients. And I know it's possible to get a little bit too legal about some of these things. And the FCA stressed that they don't mean it to be best interests in the sense that certain legal areas have particular definitions. But to me, best interests is a really high bar. And certainly I'm telling everyone who asks me about responding to the consultation that if you've only got time to send in a one-line email, email them saying, please, can we not have the consumer principle saying best interests? And that actually then takes us down a level. What the FCA are going to do later on is produce significant amounts of rules and additional rules and guidance, which will flesh out the way all this is meant to work. And what we've got at the moment, sitting underneath the consumer duty, are then two more layers. Layer one, this is sort of effectively the burger, is are referred to as cross-cutting rules. And there are three of them. Take all reasonable steps to avoid causing foreseeable harm to customers. Take all reasonable steps to enable customers to pursue their financial objectives. And I will digress for just a second, because at that stage in the consultation paper, the FCA very sweetly say consumers best understand their own circumstances and financial needs and objectives. Well, that's definitely news to all of us, I think. And then last of all, act in good faith. So those would be so-called cross-cutting rules that underpin what you're meant to do to comply with the consumer duty. Sitting underneath that are going to be four customer outcomes, which cover, and I will actually just talk in a little bit more detail about the last of these, but they cover communications, product design, customer service, and price and value. And this is where it does get a bit scary, to be honest, particularly the price and value. At the moment, what we've got, so we don't have any draft rules or guidance to look at about what those outcomes mean or what you might have to do or not do in order to comply with those. What we do have is narrative from the FCA saying this is how we want things to change, but also, and this I think is one of the very interesting things, this is what it won't mean. And I think actually what the FCA have set themselves a really hard task over the next few months. Because if you look at the price and value, the outcome they want to deliver is that effectively there would be an ability of the FCA to say the price of that product does not reflect the value the customer's getting. And that sounds very simple, but the FCA then go on to say this isn't price capping, it doesn't stop you making a profit, it doesn't remove price flexibility. So, I mean, I've been setting myself a little thought experiment as to how would I draft an FCA rule that actually allowed the FCA to say that's too expensive and not value for money, but isn't price capping. So if anyone wants to drop the answer to that into the Q&A, we'll put that in our response, but I haven't actually cracked that particular conundrum yet. And I think there's in terms of the people aspects about this I think is going to have two quite significant implications. First, culturally, and in fairness, the FCA actually talked less about culture in this paper than they could have done, but I think it is clear that they are going back to a sort of an old obsession, which I have to say I thought we'd sort of embedded, which is you've got to put yourselves in the shoes of the customer and say, would I happy to be treated this way and get this outcome? Personally, as someone who was involved in implementing TCF in firms of a whole range of sizes in 2008, I thought that we'd done that, but they clearly don't think that has taken root. And I think that's clearly going to cause particularly in product design and communication discussions, that's going to require quite a different approach. Secondly, there is an enormous monitoring and governance challenge posed by these proposals. In particular, the FCA are completely crystal clear in their expectations that firms will be actively and permanently monitoring customer outcomes and changes to customer outcomes in a way that enables them to respond to them very quickly. I think for smaller, particularly startups, that's going to be an enormous challenge, both in terms of headcount, but also how you get the MI into the right inbox. On the next steps, the consultation paper is open to receive responses until the end of July. The phase after that is there will be a feedback statement, which will also include the draft rules underpinning everything I've just talked about, is going to be published by the end of this year. If you put those together, consultation responses in by the end of July, bearing in mind everything else that the FCA has got to do, I'd be shocked if you get anything before October, November at the earliest, to be honest. And slightly prejudging aspects of this, the rules that flow from this will come into force at the end of July next year. So, I mean, the FCA do often give spoiler alerts, but some of this stuff is going to happen. And as a result, particularly for the compliance colleagues in the audience, I really encourage people to engage with the CP and try and shape it now, because the more you can influence the thinking, the better. And just to finish off then, I said I'd promised everyone an ice cream, and it's the Bank of England's work on new forms of digital money. If you have any interest at all in digital money in its broadest sense, Bitcoin obviously gets tons of the attention, but it is by no means the only model, let alone the only cryptocurrency. The Bank of England's paper is actually a really good, and that word again, digestible summary of where we are on a whole range of digital currencies and where we might go. The media get very excited about the so-called Britcoin. This paper is actually not particularly about that. That work continues. This is very much signaling, though, that if your firm's activities do touch digital money, the regulation of stable coins is now coming. There is going to be regulation at Bank of England level from that. In one form or another, they are going to be inside the perimeter. As I say, I think actually that's a more fun read actually than the FCA's CP, but actually a really good source of the current and possible future state of play. So on that, I think I'm out of time, and so I'm going to hand over to Olivia. Thanks for listening.
Very much, James, and I very much hope that after James's 3-course meal you're not all full up, as there's plenty more to come in this session this morning. So I'm going to start with a Beatles quote, because why not, and it's from the legendary John Lennon, who said that there are decades when nothing happens and weeks where decades happen, which I particularly like. And I think certainly in recent times we're well in the realm of the latter, not least when it comes to businesses reviewing reviewing their workplace and workforce strategies. So the rest of this session is now devoted to the very topical subject of hybrid working, and I'm going to kick off by a little bit of scene setting as to where we are within the financial services sector, and then follow up with a general 5 minutes run through of some of the key legal issues that our clients are talking to us about at the moment. Priyanka is then going to come on and look at hybrid working through a more specific financial services lens before we turn to our panel for their no doubt very interesting and relevant insights. So to start with, where are we? So hybrid working is clearly on the march across the sector, with most of the evidence we're seeing pointing to financial services firms very much looking to a future that balances remote and in-office work. And it's probably slightly surprising, given that the more traditional financial services businesses didn't have that much of a head start pre-COVID when it came to remote working, that out of all the sectors we work with at OC, here we've seen the largest number of early declarers in terms of businesses coming forward and announcing their plans to move to a hybrid working model. And there've been many fighting for headline space, but these include, we've heard that HSBC are cutting 40% of global office space as a result of tech-enabled hybrid working and the move of 1,200 out of their 1,800 based contact centre staff to permanent home working contracts. Similarly, JP Morgan has announced plans for what they're calling hybrid working weeks, with some days in and other days out at home, with approximately 10% of staff working from home permanently. And they intend to have about 60 seats for every 100 employees in the office. And on top of that, a recent study by McKinsey, you may have seen this, said that nearly half of remote working employees within financial services are also hoping to move towards a 4-day working week to help cope with burnout. And obviously, if this is adopted broadly across the sector, this would require a really major restructuring of teams and responsibilities for almost every firm. And this is really in line with what we're seeing across all sectors, as organisations are now clear that the future will be hybrid. Again, turning to that McKinsey study, 9 out of 10 organisations surveyed intend to combine remote and on-site working. But, and this is a very big but, this notion of hybrid working, it's a really broad church, and that's where we're finding it starting to get a little bit fuzzier around the edges, because despite those attention-grabbing headlines I've referred to, most of the businesses we're speaking to don't yet have a detailed set-in-stone plan for their hybrid working model of the future. So I think this is good news for us all, that if you are in the planning stage and are yet to articulate the specifics, you're not alone, because for most, hybrid working is still a very high level concept. If though you do have a more detailed vision in place and have started rolling that out, communicating and piloting that vision, you are pretty ahead of the curve. So in terms of the legal issues we're talking to clients about, I've picked out the 6 key ones in case they are relevant to you. First of all, as part of hybrid working planning, our clients are rethinking their internal processes, from recruitment and onboarding to performance management and learning and development, making sure that they are properly adapted to support both in-office and a remote workforce. And we've been focusing with our clients on the policies that sit behind these processes and really looking to shake up employee handbook content, and particularly when it comes to implementation of new remote working policies, which we're seeing being put in place. Now more than ever, policies do matter, and they really do need to address some specific issues, such as, for example, will employees in the office also be free to dial in for meetings? Should the rule be that if one person is dialing in for a meeting, then everybody should, to level the playing field? Is there going to be reimbursement for home office setups? Are travel expenses reimbursable for people coming in on additional days to the office? And do employees have to make up lost office days if they aren't able to come in for any particular reason? And there are numerous other issues of detail to be considered in the operation of hybrid arrangements and to be covered off in these updated handbooks. And the detail will be critical, but equally we do have to make sure we've got got a balanced approach, because it's very easy for cracked guidelines to switch over to being tram lines, and that can then hamper the whole purpose and benefits of moving towards an agile working model. Second issue is we're starting to see a lot more movement between jobs again after people have pretty much sat tight for the last 12 months. Employees are now back in the driving seat, with new research from Personio has said that 38% of employees are looking to change roles. And we know that a lot of our clients are experiencing this. And just as a little aside, the approach to hybrid working is now being listed by job applicants as one of those top factors in determining where they want to work. So increased attrition really puts restrictive covenants back in the spotlight, and many businesses we're talking to are finding these just simply aren't fit for purpose. Many of those covenants operate in a zone around a place of work. And if this isn't defined properly, then old restrictive covenants don't always capture clients located near offices rather than home locations. So in anticipation of further slackening of the strings tying workers to offices and to their jobs, then employers are now looking at tightening up these restrictions and making sure they're relevant to a hybrid working world. Moving on, clients are also navigating tricky waters around issues such as, should businesses continue to hire? Do employees need to live within specific geographies, or should they open up recruiting locations? What should they be thinking about when it comes to competitive compensation? Should they be looking at moving away from location-based models and all the controversy that surrounds these? And in considering these issues, businesses are looking now at whether their contracts enable change. And if not, what are the options, both legally and probably even more importantly, in terms of employee engagement when it comes to changing them? Some businesses I've been talking to are saying they just want a more informal change when it comes to this, with nothing being put down in writing, feeling that this will give them the freedom to call people back if things don't work out quite as planned, which is fine. But you do just have to bear in mind that even without a written agreement, employees can argue that change has been brought about by custom and practice, particularly after so long working from home. So it is best to formalise agreements, the arrangements, even if I appreciate this is a case of formalising flexibility. We're seeing a whole load of analysis by businesses at the moment around global mobility, and this is one of the sort of top issues we're talking to clients about now. This is in relation to employees who've decided or are requesting to base themselves in and work remotely from another country. And there are a load of issues here in relation to local legal responsibilities for home workers, personal tax and social security arrangements, immigration requirements, employers' liability and corporate tax implications. So in a nutshell, if you are considering allowing working from anywhere type models, these issues need to be front and center of your planning and consideration. It shouldn't be just a simple yes. And it's very much a case of playing 3D chess when it comes to managing all of those issues. Also, to flag, some of those issues might already exist, particularly if you are going to have people still working from home over the summer, which looks likely following the government's announcement this week. So you should still now be undertaking some form of location analysis. Final 2 points, diversity and inclusion has, of course, risen up agendas, and businesses are looking at ensuring equality in a hybrid working world. So assessing, for example, are more women than men likely to take up the opportunity to work from home? And this is involving increased analysis of diversity related data in the context of survey feedback, and has data protection considerations. And you just need to be aware that these vary from jurisdiction to jurisdiction. So if you are rolling this out internationally, there does need to be thought and planning around it before looking to adopt a one-size-fits-all model. Finally, we're seeing some employees trying to get a head start when it comes to working from home and changing their contracts in submitting flexible working requests now. The thing you have to bear in mind here is that any tribunal claims relating to these requests are in respect of the process rather than the actual decision, provided that it is properly justified. So the approach we're taking now is notifying the employee that the final decision will be postponed pending a decision being made in respect of the wider hybrid working piece. But this needs to be really carefully and properly managed to avoid falling foul of flexible working legal obligations. So those are my top 6. Overall, what we're seeing across the board is very much a test and learn approach as businesses are dipping their toe into the waters of hybrid working and looking at codifying their hybrid working models. Just one thing before I finish off to watch out for. In April, the House of Lords Select Committee on COVID published a report called Beyond Digital Planning for a Hybrid World, a light bedtime read if you're interested. And that called on the government to consult on new ways of working. And that in due course will no doubt cover off some of the issues that I've raised this morning. So finally, what is certain now is that hybrid working needs thoughtful, careful planning and clarity. And that's just on the legal side, before we even consider the practical challenges that our panel will be looking at later in terms of culture, engagement, management and accountability. So with that, I will now hand over to Priyanka, who is going to put some colour on all of this in relation to issues that are particularly relevant to financial services. So handing over to you, Priyanka.
Thanks, Olivia, and good morning, everyone. So as Olivia has just flagged, hybrid working does throw up some quite significant issues for regulated businesses. And since the start of the pandemic, the FCA and the PRA have published various pieces of guidance related to remote working. And some of the key themes from that guidance relate to the regulators' concerns about the potential risks of market abuse and misconduct while employees work remotely, data security concerns, how to maintain good culture, how to encourage whistleblowing and speaking up in a remote environment, and also adapting obligations under the senior managers and certification regime to a remote environment. And a lot of that guidance will continue to be relevant going forwards, and it's helpful for HR and compliance to take that guidance into account as firms adapt to a hybrid working model more permanently. So just to set the scene on the regulators' comments on market abuse and misconduct, since the start of the pandemic, the FCA has continued to emphasise that firms should be focusing on information security. So without the physical supervision and monitoring that goes with being on a trading floor or in an office, and with individuals who may be sharing homes with family members or flatmates who can easily overhear and see sensitive information, you can see how market abuse and data security is a big concern for the regulators and will continue to be so going forward. And very early on in the pandemic, the FCA suggested that firms should use enhanced monitoring to prevent market abuse. In its market watch in January this year, the FCA also flagged the risks from the use of unmonitored or encrypted apps, such as WhatsApp, for potentially sharing sensitive information connected with work. And it's clear that the FCA views these apps as a significant compliance risk. And on that point, in October last year, in a speech on market abuse, Julia Hoggart, who was then the FCA's Director of Market Oversight, essentially said that office working and home working arrangements need to be equivalent. And she really emphasised the regulator's strong view that firms should have updated their policies, refreshed their training, and put in place rigorous oversight reflecting the new environment, and particularly regarding the risk of use of privately owned devices. So in terms of practical considerations then for HR and compliance in dealing with these potential conduct risks in a hybrid working world, firstly, it's an obvious point, but HR should make sure that data protection and information security policies are appropriate in the current climate and properly adapted to hybrid working. So, for example, having specific instructions on what employees should be doing when working from home in terms of locking workstations, password protecting devices, keeping hard copy information locked away securely. And as well as updating policies, firms also need to make sure that staff are made aware of those policies and have received appropriate training on the increased risks to confidential information when working from home. Ensuring that staff have appropriate equipment, such as headsets, another obvious one, but ensuring that sensitive calls and customer information can remain confidential. HR and compliance may want to review policies on the use of devices for work purposes, such as BYOD policies. And if firms can't properly monitor those devices or communications, then you may need to make it clear that the use of privately owned devices or WhatsApp for business purposes is prohibited. And firms may also want to review recording policies and procedures and ensure that they're also up to date and adapted for hybrid working arrangements. Given the new environment, many firms may be using new types of technology to carry out monitoring and recording in line with regulatory obligations. And firms just need to make sure that any new technology that is used is proportionate from a data privacy perspective and not too intrusive. So, for example, mitigating the risks that some technologies might be picking up on other conversations taking place within the same house, and just making sure it's not picking up on any unintended personal data. So if firms are using new technology, it's sensible to carry out a data privacy impact assessment and just make sure that the collection, storage and use of this data complies with data protection principles. And the regulators have also highlighted that if new or amended policies are introduced or if new technologies are being used, it's helpful for firms to provide enhanced or refresher training to staff to cover the use of new technologies and the conduct risks that could arise. So linked to the topic of market abuse and misconduct is whistleblowing, and speaking up is another big area of focus for the regulators. So HR and compliance should consider whether speaking up policies and processes need adapting in the new hybrid working environment, and also how to encourage speaking up in a remote environment. The FCA's talked a lot about psychological safety, and it's emphasised that leaders and teams need to consider how they can build and sustain psychological safety in a virtual environment, so that staff do feel safe to speak up. And suggestions from the FCA on how to do that are to focus on appropriate and regular training programs to encourage speaking up, as well as reminding employees about the importance of raising concerns, both through formal and informal channels. The FCA has also focused quite a lot on the role of middle management as a bridge between junior and senior employees, and that's based on their view that junior employees are more reluctant to speak up. And it suggested that firms should focus on educating middle management on how they can create an environment where employees can speak up, and also give managers training on how they can recognise employee concerns and how to deal with them. So looking at the role of senior managers in all of this, the FCA expects individual senior managers to play a key role in embedding the right culture and governance within firms. And that includes in relation to the proper use of electronic communications. So it's helpful to make sure that the risks arising from hybrid working are being properly and continuously reviewed, analysed and dealt with by senior managers. Just as a reminder, senior managers do have regulatory responsibilities under the senior managers regime to take reasonable steps to ensure that the business area for which they are responsible for is controlled effectively and complies with the relevant regulatory requirements and standards. And senior managers also need to ensure that the responsibilities that they've delegated to other people are properly managed and they have oversight of those. Both of those things are obviously a lot more challenging in a remote environment. So some of the specific things that senior managers can do to discharge their responsibilities include holding minuted virtual meetings and calls, maybe with a preset agenda which records the topics to be discussed, where those managers can discuss the challenges that the business faces in relation to remote working, trading remotely, and the steps that the firm and the business will take to overcome those challenges. Scheduling daily calls between senior managers and direct reports, just to ensure that managers have sufficient oversight and control over their relevant business areas. Formally reviewing and approving updates to policies and control frameworks in relation to remote working, and senior managers should genuinely be involved in those types of processes. And finally, HR and compliance may also want to consider how to adapt obligations under the senior managers and certification regime to a remote or hybrid environment. So, for example, with increased hybrid working, firms may need to adapt conduct rules training to ensure that it can be delivered electronically, and also to ensure that it reflects the scenarios and risks that can arise from remote working. Firms also need to consider their certification obligations to ensure that staff are fit and proper for their roles. And a big part of that will be making sure that managers have sufficient oversight of employees to spot any issues relevant to fitness and propriety. So again, regular check-ins and employee monitoring will be really relevant to that. So that was a quick run through on the regulatory side. I think I will hand back to Olivia now to move on to the panel session.
Thanks very much, Priyanka, and moving on to the panel session, and I'm really looking forward to this for the last 20 minutes. And this will be really interesting as it's looking how what we've been talking about translates in practice. And we're going to hear 3 different perspectives from Lucy, Matt and Tom. So Tom, first of all, needs no introduction here. Tom Holmes, director and founder of Veran Performance. I'm really interested in hearing from you, Tom, in terms of the trends you're seeing in the market at the moment, insofar as different approaches to hybrid working go. Can you talk us through those?
Yes, I'll talk a little bit about the feedback I'm getting from HRDs, and I interview HRDs every couple of weeks for my podcast, and actually everyone is talking about this hybrid working at the moment. It's becoming number 1 on most people's agendas across the market, unsurprisingly. But their main concern is this kind of split between their need to either be kind of doves or hawks. So those organizations who are allowing full hybrid working, etc., are feeling quite relaxed and in quite a nice position. But those organizations who are not, who need to push people back into the business, bring them back to the office, bring them to their workplace, are feeling almost like pariahs. I mean, who wants to be a hawk, right? It's a really tough position for our HR leaders and HR managers, in that for those people who need to bring people back. And I was kind of like thinking a little bit about the 2 reasons which I'm seeing why people need to bring people back. We've had a lot about the ones, the actual necessity of certain occupations, certain roles, etc., to bring back people into the office. But I think, and I think Priyanka talked about it quite a lot earlier, which is that actually it's the risk dimension. It's this emerging trend of the ability of hybrid working from home to generate and allow a culture in which fraud and other misbehaviors can occur more easily. And I think that Priyanka's talked a lot about the hard controls which are needed to support that and stop that happening. But what if we all think back to the SMCR, at least half of that was about the softer cultural controls. The reason we don't misbehave is because we are sitting next to someone else in the office. The culture we've generated in our office work is one which discourages poor behavior and risk-taking, etc., or encourages it to the right level. And all HRDs are really struggling, I think, with this emerging trend. And this is going to be, I think, the story of the next 6 months, which is how do we maintain the cultures of our business such that risk, compliance, and other things are maintained to the level which we used to do through presenteeism and actually having direct eyesight and supervision. And I think this is the hardest challenge which most HRDs across industries are starting to think about and starting to have to address, because it's turning more and more of them into hawks, and nobody wants to be that position. So that's my kind of initial thought, Olivia, on what I'm seeing in the broader market and what I'm hearing from my HRD teams.
And in those conversations you're having, Tom, with HRDs, are they telling you that they and their teams have had to adapt and change to provide a different service and fulfill a different function to the business? So is it
Yes.
that their role has changed since pre-COVID days?
Absolutely. I mean, if we, pre-COVID days is such a long time ago now that it's hard to even remember back. Yes, there have been substantial changes, etc. The next set of changes coming, though, and the ones they're starting to plan, are how to provide the same level of controls, more detailed checks, and more detailed HR checking in on people, etc. Something which, for the last year, has not been the most important element. It's been getting people to work, etc., and making sure that people are happy and actually supported. Now we're looking at a new trend, which they're all working on, which is to actually start building back HR processes and HR control mechanisms to rebuild the strength which they're going to need in the next year or two, as we move into, you know, what the government's talking about as being the default across business, which is the hybrid working model.
Thanks, Tom. And, you know, we all know, of course, that tech is playing a really important role in hybrid working implementation. I'd just be interested to hear whether you've seen increased adoption of digital tools to facilitate remote working, or on the other side, to facilitate a return to the office.
For sure. I mean, we've all got the tools working, etc. But again, as Priyanka was saying, the issue is that some of those tools which we have used in the last year are not the tools we should be using in the next year. So we're seeing increasingly rules on WhatsApp, increasingly rules on private communication between employees, and actually the role of us as organizations to supervise that and support safe co-working, etc., in an environment where in many businesses the kind of tools we've switched on and allowed use of over the last year are not actually going to be appropriate to the working space in future years. So what I'm seeing is an increased review and reduction in the number of channels and tools which we're able to use, and starting to think about stronger guidance and stronger support for the tools we should be using. So, and of course, the second part is, you know, everybody needs everything in the cloud now. So the move to SaaS and the SaaS mindset, which is required to do that, is becoming front and center to every single business globally. I mean, you know, I don't think there's a IT director in any large organization who doesn't have a plan to complete their SaaS migration over the next 12 months. And if they don't have that plan, they'll be asked to get one pretty quick, I think.
Yeah, we're hearing similar stories our end as well. Thanks, Tom. That's all really useful and interesting. So I'm going to move on to you now, Lucy, if that's okay. So Lucy Bond is Deputy Chief of Staff of Infrastructure at global active investment management firm Man Group. So Lucy, it'd be really interesting just to hear what stage you're at in relation to transition or not, as the case may be, towards a hybrid working model.
Yep. Well, we have been talking about agile working probably for a couple of years, but in a very esoteric type way. And then having conducted a number of pulse surveys during lockdown of various business units, that told us that our people wanted more flexible working, or more flex on where they could work from. So we have implemented an agile working model now, which generally works across 4 categories. So you might be based in the office 5 days a week. You might be a mix of 2 to 3 days in the office or at home. You might be roam. So for example, our sales staff who are generally on the road the whole time visiting clients, or you might be home. So primarily based from your home location. And that allocation has been led by people's roles. So where is the best place for them to do their job? So generally speaking, our trading team expect to be in the office 5 days a week, along with our buildings manager or our reception staff. So it's been quite dictated by practicality.
That's really interesting, Lucy. It sounds a very people-centric approach based on where people can do their best work. Yep. And who internally has been involved in the implementation project? Is it just HR, or is it wider than that?
No, it's been much wider than that. So it has been, as I said, top down in the sense of role led, but then HR along with our talent team, and then all of our people managers in talking to their staff and getting employee buy-in to the category that they're allocated to.
Oh, thanks, Lucy. And are you able to just give us some examples of changes you've already implemented, particularly in respect of policies and procedures was something I touched on earlier. Is that something that you're thinking about?
Yes, absolutely. So agile working guidelines with some frequently asked questions. We're thinking through an etiquette guide, which is one of the things you touched on. So if some of your team are in the office and some are at home, should everybody be on a Zoom meeting? Also, there is an extra level of care, I think, in the old habits of you've got two people in the office and one at home. And it's just come into my office, we'll have this conversation. Can you just fill Lucy in afterwards because she's not here at the moment? And needing to be very strict, actually, from an inclusion point of view on making sure everybody has a voice at the table. And then there is also, to I think Priyanka's point about people working from other countries and the complexities around that, definitely having policies around that bit too.
Yeah, and that was something I was going to ask you, Lucy, is you are an international business, so I'm assuming that throws up particular considerations and challenges, or maybe opportunities in respect of this sort of project. Is that the case?
Yes, except that just because you've got an office in Italy doesn't mean that anybody can go there. So there is a sort of level of complexity there from a regulatory point of view, definitely, but also from an immigration point of view, post-Brexit. You need to safeguard your EU employees who are currently working in the UK. They need to spend a period of time in the UK each year. And for a period of time till they get indefinite leave to remain or settled status. So there is and also the tax point of view as well, a massive layer of complexity there, which we are absolutely looking at. Similarly in the US as well, just because you've got a location in Florida doesn't mean everybody can go and work in Florida.
Of course. And we know that reviewing any workforce strategies goes hand in hand with reviewing at the same time workplace strategies. I'm just wondering what your approach has, whether that's had a knock-on effect in terms of your use or intended use of office space.
Yeah, I mean, we were very lucky there because we had been in the middle of a project to locate all our UK staff, or all our London staff, I should say, in the same office. So we were actually able to pivot halfway through that project and change the way the space was being used. So more collaborative spaces, making the office a location that you come to collaborate with people rather than somewhere where you come to sit every day.
Thanks, Lucy. And last question for you before we move on to Matt. If I had to ask you, what would be your top tip, maybe particularly around the safeguarding of culture piece, which I know is a real concern at the moment, what would that be?
I think that there's a huge thing about communication and listening, and then more communication and listening again, and listening to the positive stuff that comes back. So our CEO has been doing a weekly roundup email, which he started at the beginning of lockdown, which has, we've won new client mandates, or, these are the babies that have been born this week. These are the people who might have been lucky enough to get married. So that has been something that we listened to staff on, and definitely taking that forward into the new normal.
That's great. Thanks ever so much, Lucy. Matt, over to you, if I may. Now, introducing Matt Phelan, who has possibly the best title ever, and you can't help but smiling when you say it. So Matt is Head of Global Happiness at the Happiness Index, say I am smiling, who are providers of employee engagement surveys and solutions to help create a happier workplace. So Matt, you can give an interesting insight here from a really different perspective. I guess the starting point is, have you seen, and I think I probably know the answer to this one, but have you seen an uptake in businesses reaching out to employees via engagement surveys over the last 12 months?
So yeah, Olivia, this as you said, the simple answer is yes, but I want to build on something that Priyanka was saying to do with the FCA report on this. So the FCA report draws a clear line between the 2008 financial crisis and culture within the businesses and the organizations. What we're seeing at the moment, and we work cross-vertical, so I'm going to try and represent about 1 million employees here in my answer, which is going to be difficult. in the financial services industry, I'm saying the biggest gap between HRs and CEOs that I see in any industry. So I'm just trying to bring an outsider's view in. And I think what we're seeing is, just to build on what Tom was saying, so there was presenteeism in the 2008 financial crisis, but it still happened. So I just want to bring out the elephant in the room with a quote from Morgan Stanley yesterday, because some of the CEOs of Goldman Sachs, JP Morgan, Morgan Stanley are making big statements on this subject, which I think are important to bring up to represent the HR people on the call. So I'll just bring this up. I'll just read it out. You may have heard it yesterday. So it says, so this is the Morgan Stanley CEO. Make no mistake about it. We do our work inside Morgan Stanley offices, and that's where we teach. That's where our interns learn. That's how we develop people. I'm in Colorado and getting paid like I'm sitting in New York. Sorry, that doesn't work. So to answer your question, we are seeing a real disparity between what HR people want to do and some of the CEOs of these organizations. And to go back to Priyanka's point, I just want to bring up the actual guideline of what the FCA say on this, which is the exact quote from the FCA is avoiding fear-based cultures and encouraging listening and speaking out, which is what Lucy was talking about. So there's a real disparity between what the FCA is saying, what HR directors know and believe. So at worst, what we're seeing is corporate gaslighting. At best, which is what I believe we're mostly seeing, is a lack of data. Because if you were really aware of how all your employees felt about how that statement would make you feel, I don't think you would say it. So I think there's a group of people that are slightly out of touch, that have different objectives to the organizations. And just one point, there is also a direct line between how your employees feel and the financial performance of your company. So this isn't something just HR should be looking after. So it's a long question too. Yes, there's a massive uptake with HRs, but we're having to do a lot of work with CEOs, which is difficult if a CEO has run an organization in one way for a long way and the pandemic has changed the world. So we're trying to educate through data, but there are some tough conversations to be had, which is, I felt I had to raise that elephant in the room around that conversation, Olivia.
Yeah, no, understood. Thanks, Matt. And before I ask you about the surveys, I've got a bit of a 3-in-1 question, $1 million question, I think. So what is a happy workplace, Matt? How do we measure it? And what can businesses do to create happier workplaces? How you cover that in a minute or so, I don't know, but I'm sure you give it a go.
You see it on Instagram all the time. It's like these big quotes that say, bring your true self to work, all that kind of stuff. Sounds like they sound like inspirational quotes, right? But when, like, we've touched on things like diversity, we've touched on inclusion and so on and so on. What a happy workforce is, and again, this is linked to financial performance. Scarily, it's also linked to death rates in hospitals, because they're not looking at financial performance there. They're looking at happiness of staff. But generally speaking, being able to turn up to work and be yourself, and long story short, you waste a lot of emotional intelligence emotional energy trying to pretend to be someone else. So allowing people to be themselves and not putting out these big statements, because someone might be working in Colorado because they've got mental health issues at the moment. They may be caring for a parent and so on. So it's a big question, but being yourself at work, and you need frameworks around that, which is why engagement and happiness work, because engagement is around what the company wants and happiness is what the employee wants. I'm trying to draw a 4-box quadrant with my hands. But it's about getting the balance. It's about getting a balance between the two. And some of these quotes from CEOs are from a world where they had all the power, but we've got a mobile workforce now. We can all go and work for, I'm a customer of Osborne Clarke. They're an amazing company. I can go and work for Osborne Clarke tomorrow if I want. So I think that some companies are missing the competitive landscape here. If I was working in the retention team at some of these organizations, I'd be tearing my hair out.
Thanks for the plug, Matt. I appreciate that one. And in very general terms, what has been the outcome of the engagement surveys you've seen? So particularly in respect of what employees are wanting at the moment when it comes to hybrid working, and also in respect of well-being and employee engagement, which I know a lot of our clients are really interested in at the moment.
Yeah. Main themes are that the pandemic has been good for some people and not so good for others. There's massive disparities on how people have experienced it. So, for example, I hire a lot of engineers. A lot of engineers prefer not working in an open plan office. So the challenge for all HRs is, how do you create a personalized workforce? So I have a personalized approach to the workforce. So the reason I'm a customer of Osborne Clarke is because I went from my previous company that I started and founded, I sold it to a company that won the French stock market. So suddenly we were heavily regulated. But you can still, using the legal excuse is always an excuse. You can still work with you can take good legal advice and still create an environment where people can be themselves. Because sometimes that's the excuse. You say, well, there's a legal reason why we can't give people this, and this. If you work with take good advice, you can create a culture that doesn't leave you open to legal problems.
Thanks, Matt. And I see we've hit 11 o'clock. So just one final wrap up question. Same one that went out to Lucy. What's your hybrid working top tip?
I'm gonna build on Lucy's point, because it's what I wanted to say. So I would say, firstly, listen to understand, so not to respond. We all want to do that, right? We all want to get in there and answer the question. Listen to understand, and when you've understood, respond. There's no such thing as survey fatigue. There's just action fatigue. But the tendency of us is to jump in and answer all the questions. The CEOs with the highest happiness and engagement scores that I've seen on our model are ones that have responded and actually said, these are the things we can do, but also this is the things we can't do. And people respect you. People can handle being told the truth. Guess what? All your employees are adults unless you're breaking labour laws. So people can handle being told the truth. They can't handle being what they feel is like being lied to. So just be open with your teams, and they will respect you for that.
Yeah, good advice. Thanks, Matt. Thanks, Lucy, and to Tom as well. And I think that brings the panel session to an end, and I'll hand back to Zoe.
Yes, thank you. Thank you, everyone. I normally do a roundup and the 3 top tips, but I won't today because we've run out of time. Thank you all so much, the panelists, and for all these this morning. Do connect with our panelists on LinkedIn. They're always happy to take further questions. The next session will be in September. We are possibly looking to do a small roundtable of a live in-person event, but possibly may still have to live stream it on a webinar. But we'll be in touch with lots of details, and I look forward to seeing you all very soon. So thank you.
Thank you for organising, Zoe.
Thank you.